Hey, this is Matt from InvestiQuant. Today is Thursday, December 2, 2021. Yesterday, the markets were working their way higher before we got news of a coronavirus variant being found in someone in California. That sent the markets into a sell-off. So after pushing higher the majority of the morning, we reversed and then took off, closing down near the lows of the session. We had a sizable sell-off, lots of range, lots of volume. In fact, we had over 150 points of range in the S&P. That is quite large, the largest range we've had in a long time. And what we'll be looking at this morning is that type of reversal pattern. You know, yesterday was clearly trying to work its way higher all morning before that news came out. So we had a pattern where we were spending the majority of the time trading higher, and then it was followed by just violent selling. So we'll look at a pattern like that here. Let me get this set up. I've got all four instruments selected here. The trade type is long, and it enters at the open of regular trading hours, which is 9:30 a.m. Eastern Time. It's got an exit set to 4:15 p.m. Eastern Time. Currently in the overnight session, we're trading up everywhere. So I'm going to add that to the test. Gap up, this is something you will need to confirm, and this does kind of change the patterns, the strength of the pattern I'm about to show you. If it is a gap down, the gap down version is not as attractive as the gap up version of this pattern. So be sure and confirm that at the open, because in this volatility, who knows where we're going to open. But I've got gap up selected here. The next thing I'm going to do is I'm going to go to the price pattern. I'm going to say that yesterday closed down near the lows of the session. You can grab that from the active today. So over here, you can just click on close and bottom 25% of the daily range. That comes from where was the location of the last open and close right here. And now I've got that selected. Now I'm going to go to profile patterns. It's going to use a market profile pattern. And over in the active today, I'm going to grab it from that section again. I'm going to click on POC finished in the top 25% of the daily range. So what this is saying is the price that was traded at the most in terms of time. We spent the most time trading a single price was in the top 25% of the daily range. So that took place yesterday. I've got that selected here. And then next, I'm going to put us in a similar market environment. We are below a 10 and above a 200-day simple moving average. And now I can click view results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. When you gap up and the prior day closed near the lows of the session. However, the price that was traded the most at was in the top 25% of this daily trading range. So you got a day that this is typically characteristic of a day that gets some sort of news or late day reversal, just like we saw yesterday. So it spent the majority of the time trading in a less volatile range and trading up near the highs of the session. Then it gets selling pressure, which just keeps expanding to the downside, closing down at the lows. This is taking place below a 10 but above a 200-day simple moving average. Historically, we've got 34 samples in the S&P. We've got 25 in the NASDAQ, 33 in the Dow, 17 in the Russell. Win rates on these are fairly similar. You've got the S&P coming in at 68% of these have closed higher than the open. The NASDAQ 68% as well. The Dow coming in 64%, the Russell 59%. So pretty much in agreement there around the low 60s% on average. If we look at the average moves, average win is larger than the average loss in the S&P. That is also the case in the NASDAQ and in the Dow. The Russell is the only one that has a larger average loss. So historically speaking, this pattern has been more favorable to the bulls. And as I mentioned earlier, the gap direction does matter on this one. If by chance we are to sell off into the open and opening lower, this bias gets more neutral. So it's definitely better on the up gaps. Hopefully you found that helpful. Good luck today. We'll see you next time.